Well, it was fun while it lasted. According to one big bank, could it just be the first of many dominoes to fall in terms of the sentiment for gold's big rally? And we'll find out in this video as we explore. The first of what could be several big banks making and revising their gold outlook for the rest of 2024 and 25 could begin with HSBC. They have now revised their forecast. They were fairly bullish on gold earlier in the year. I think I even reported on it. I'm going to be referencing an article from investing.com that outlines what they're talking about here. Now, before we get into this, you should know that many of these big banks, including Goldman Sachs, JP Morgan, HSBC, and others, they do have their own analysts that do talk about commodities in general and precious metals in particular. And they make forecasts based on a myriad of different factors that come into play. And now HSBC is revising their forecast downward. But what's really stunning about this is just how much lower their forecast is for gold in 2025. Gold prices have surged to a record high in the middle part of May, driven by robust safe haven and hedge fund purchases. This rally has been prompted by expectations of rate cuts from the Federal Reserve and other central banks, as well as increasing economic uncertainty. Furthermore, rising fiscal deficits have spurred significant gold purchases predominantly in the over-the-counter market. Now, what has changed since then? I don't think anything's changed. It seems like we're continuing on that same path, and honestly, as I mentioned before, really no matter who wins the election, we're probably going to see higher prices, I would think, for both gold and silver. The jump to record highs come despite positive real rates, HSBC's precious metal analyst said. Gold is historically sensitive to real rates, and while there has been a notable disconnect in this relationship, we expect real rates to weigh on gold towards the end of 2024 and 2025. In other words, what the rate you're going to get when you go to buy a home or an auto or your credit card, that type of thing. The Federal Reserve may cut rates by a quarter point in September, but it may not have that much of a dramatic impact for gold and silver prices going up, according to HSBC. I think that's what they're referring here to. And there may be more weighing against gold's price heading into next year than not, as what they're saying now. Although exchange-traded funds continue to liquidate, strong purchases in the OTC market and by real money investors have counterbalanced this trend. Net long positions on the Chicago Mercantile Exchange remain high, but analysts suggest they may not increase significantly from current levels. And this is something. Now, we also see other things that are occurring as well, too, in terms of what's going on in China, that they have paused their buying of gold for the month of May and now recently reported for the month of June. Even though that is the case, market sentiment is clearly bullish. And while the near-term upward trajectory shows no signs of slacking, they think prices are progressively overstretched, they noted. Before we get into where they think the prices are going to go for 2025, check this out. With the spot price of gold and silver continuing to rise, it becomes all the more important that we shop around for the best deal for precious metal products. But it becomes very time-consuming to try to peruse through all of the emails that we've subscribed to from precious metal bullion dealers, or surfing the internet to try to find the best deal for the most liquid and recognizable gold and silver and platinum products out there. So what do? Well, there's an answer that comes to us from bullion.com. Bullion.com is a dealer that does provide a way to be able to comparison shop for some of their products. That's the unique feature that they have. Bullion.com is sponsoring this video, and I'm going to show you exactly what they can do to be able to provide that service to you. This is a relatively new company, just over a year old, but they have a small staff with over 50 years of a combined experience in the world of precious metals. And they have a very robust website that you can use to shop. And so I'm going to show you right now how this works. We'll start here from their American Silver Eagles coins page, and we're going to look at the American Silver Eagle random year offering. And when we click on that, we can see that in this particular case, they have a sale price going on. But of course, prices will obviously change depending on when you see this video. But we can scroll down and we can see that they show all of the different competitors, a sampling of them there. And we can see that indeed, in this case, Silver Gold Bull has the lowest price. But bullion.com's price guarantee is in effect. All you have to do is just call their number, and they will be able to adjust accordingly if it is eligible over the phone. Why are they able to be able to provide such competitive pricing, especially for a newer bullion company? Well, they do that by implementing minimum orders. And in this case here, a minimum order is 20 is required for purchase. So it's 20 ounces of silver and 1 ounce of gold, or the equivalent of 1 ounce of gold. And that is when you get the free and fast shipping. And that is how they're able to provide a good deal. Now, most bullion dealers will have lower minimum orders to get free shipping, but in many cases, especially for silver, it's not that much lower. So that is one thing to keep in mind. And remember, also, bullion.com accepts most forms of payment, from e-check to wire, cryptocurrency purchases, PayPal as well, and credit card. And they also have deals. This is one thing you're going to want to check out for their weekly deals that will change every week there. And you can see that tells you how much are left, quantity of each of these for the deals that are going on. And they also have something that is quite special, and that is they have the lowest price on some of these gold coin sales. But also here you can get silver at spot by using their app. And this is page that shows their application available on Google Play and the App Store. So be sure to check that out. I'm going to post a link to bullion.com below. It just is one of the places you can check out for your precious metal needs, and check out bullion.com. Now the article continues here. Back to gold is within what the HSBC has raised its average price forecast for gold due to the near-term strength. The bank now expects a potential decline in prices by the fourth quarter of this year and heading into 2025. Specifically, analysts have lifted its average gold price forecast for 2024 from $2,160 an ounce to $2,305 per ounce. Yet, their 2025 estimates are now lower. They've made a reversal here from $2,105 an ounce, that's $2,105 per ounce, to $1,980 an ounce. That is a 12% drop from its current levels. That is not good, as to what they're saying. And of course, many of you are probably screaming at your screens right now that, well, that's just one bank. And who cares what the banks think? You know, it's the market that's going to really determine the prices. And that's true. But what these people do, and a lot of these big analysts, from hedge funds to big banks and all the sort, they do this, and that does have an effect on sentiment. I think it can become contagious to a point, barring any geopolitical uncertainty, which is even more than it already is, and other market reactions to day-to-day movement and price. That does, and also technical analysis as well. But when we see demand decreasing from central banks, especially China, and maybe even others down the road, they may feel like, you know what, we've got enough, we can handle this, then that is going to bring sentiment down, and it's going to affect on the markets. But think about it. If gold falls below $2,000 an ounce in 2025, it's bad news for gold's rally, but it's good news for us because we can buy gold cheaper. Of course, by then, inflation may be so high that it'll be even much harder for us to buy gold, even if it were to fall 12% more below $19 or $1,980 an ounce. Analysts expect gold prices, though, later to rebound in 2026, raising their average price projections for that year from $1,880 an ounce to $2,025 an ounce. So still lower than where they're at right now. In other words, according to HSBC, the gold rally is definitely done. It's over. And it's over starting later in the year here by the fourth quarter. That's all she wrote, according to HSBC. So an interesting take, I think, on what their analysis is. And the reason why I think this is a big deal is because usually where one goes, others follow. And this is the first that I've seen anyway of some of the bigger banks to make this kind of call. Goldman Sachs is also famous for making calls on gold prices, and usually they're a bit more than what actually comes to be. I think they made $3,000 prediction for gold coming within the next 12 months or so. So it'll be very interesting to see if others follow suit. But as part of what I like to do on this channel is to give you some insight and some news on where the markets are heading and where sentiment is. And you measure sentiment by what others are saying, other analysts are saying. And so that's what I like to do, is to bring you some of that to give you an idea. It doesn't mean it's going to happen. But if it is true, it provides a buying opportunity, but it also means that the gold rally may be seeing the beginning of the end for now. And even as such, it's been a good run if that is the case. And I'm not writing the epitaph of the gold rally for yet, which is why I posed it as a question. But a fascinating thing to think about. And I'm curious to see what you think about this. You know, I think as far as for us in the community, and we absorb information from different sources and the like, you can take this more seriously or not. And I think that's just it. How much stock do you put in some of this? I think as what I do as a content creator is to give you an idea of what they are saying so you can make your best judgment and decision accordingly. So let me know what your thoughts are down in the comment section below. I hope you found this video informative, insightful, and educational. And I would like to extend a multitude of gratitude to each and every one of you for taking the time to watch, and to encourage you to please rate, share, comment, and subscribe.